Hello, trade friends. We're back with another Simply Trade Roundup, where we bring you all the good news or the news that we find. 3 articles, basically. Not much else to report on this day, except that January seemed like it was 500 days long, and then February just flew by. How do you guys feel? Hi, Andy. Hi, Lalo. How do you guys feel about that?
Well, it was some crazy weather. I mean, it was January, had some really bitter cold stuff and some storms running through. But and then, here we are in February. And I got to tell you, yesterday here in the Memphis area, it was like close to 75 degrees Fahrenheit. So I was like, yes, it's like, the buttercups are blooming already here and daffodils. And I got to get my little fanny out in the yard and cut the crepe myrtles and do some yard work because things are beginning to bud out. And you're like, oh, no.
Wow. That's warm.
Well, I will say this. Remember, just recently we had the proverbial Groundhog Day. And the groundhog said that there would be an early spring. And I was like, yeah, we'll see. Well, it appears that little turkey was correct. So I don't know about y'all, but it's warming up and it's some beautiful weather. So we're fixing to get some rain today, though, but that's normal for this time of year.
We have some pretty good articles going today. So, again, those articles are up on Global Training Center. We put them up Friday during the day. So you can definitely read them if you have any more questions or just want to go through them. Okay, so let's start. Our first article is that the U.S. import prices post largest gain in nearly 2 years in January. So basically, this article is highlighting that the U.S. import prices surged by 0.8% in January, marking the largest gain in almost 2 years, hence the title. And they're saying that this increase was primarily driven by rising costs for petroleum and other goods. So we kind of know that we're in an inflation, but let me get my question out. How might the rise in import prices affect our supplier costs and our relationships with them? So like the costs are rising. What do we do? Like, how do we handle this? And is this something that we can do something? Is there something that we can do about it? Okay.
It is one of those opportunities where companies are going to have to get smarter. And we've talked a lot about this in different episodes as well in the past, whether it's in the news or in with other guests, is that importers here in the U.S. are just going to have to get smarter about the way they source products. Maybe they're going to need to source products closer to the United States versus going so far like China. You know what I mean? Like sourcing from abroad that way. In my opinion, I just feel that it's one of those challenges where one of those many challenges where importers are starting to have to figure out what is best for them as they see these increases going up. One of the things that we discussed a lot in this year, especially in this year, has been using data to help you make decisions. In this case, read the data, read the information that's there available, and follow that data. We've had in the past Craig Fuller on our podcast, and he is just so full of data. He has so much data that they can predict various different things for the freight industry. Same thing with trade. I mean, if you were to follow and look at your data, you should be able to maybe predict. Obviously, it's hard to know exactly what's going to happen, but you can predict and become more resilient. So that's just my point there. I know the folks over at Flexport have said the same thing and information like that. And I'm actually working on a guest that hopefully we can get on the show whose business is all trade data, and maybe we can get them to talk to us about, how how that affects and how you can use that to, make these kinds of decisions.
Yeah, that sounds pretty smart.
So the thing that's fascinating to me as we look at it is that a lot of this is coming out as far as it's the Reuters, article here that published the article anyway. It talks about how the government has been revising some of these statistics. So they keep trying to make it, oh no, this has been good for the month of December, no change, and then they come back 30 days later and they have to revise it because it looks worse than it is. One of the things again on this was that it was talking about how the cost of goods went up, excluding tariffs. So, but when you put the tariffs in there, again, it's like, well, excluding tariffs, prices have gotten better, but then you put the tariffs on top of it, which they're excluding on this particular report, and then it inflates the whole thing. You got to look at things holistically. And it talks about how the U.S. economy has been, strong and resilient. I'm going to tell you, they're trying to put lipstick on a pig. The U.S. economy is struggling. The average person in the U.S. is having to pay more for food, for fuel, for the cost of housing has gone up significantly, and all those kinds of things. So when we talk about the cost of imported goods going up, yeah, there's going to be a domino effect only because it costs more to manufacture. So here's one of the key things. From a planning perspective, what are your takeaways here? Is basically on imported goods as a whole, just in general, what I'm figuring up, and this is an Andy Shiles estimate, so take it for what it's worth, but your cost of goods, you can plan on it costing you about 8.5% to 10% higher by the end of the year. That's one thing. Second thing is the interest rates. If you remember, about 3 months ago, there was this big deal before the end of the year. There was this big expectation that the Fed was going to cut interest rates significantly. And everybody was all excited for it. And I was saying right then, I said, I don't see it. I don't see how that's going to happen. If they cut it, it would be way late into the year. And so far, the Fed keeps postponing it, and that's what the estimate is. Oh, they're going to postpone it a little bit further. Keep in mind, we're in an election year. So what's going to happen is we get closer to the election time frame is when I think the Fed is going to try and monkey around with the interest rates, whether it's a valid thing or not, to try and lower and make it look like, oh, no, see, things are finally turning around. Well, I got news. If you look at the last 3.5 years, things have gotten steadily worse. Costs is going up, interest rates have gone up, everything is going up. You may have bumps in the road where somebody's trying to do something. And so your cost of goods, your takeaway here, you're going to have higher interest rates, and you can look at an 8.5% to 10% increase in basically the cost of goods. If you're buying them, if you're going to buy them for wholesale and then distribute, it's basically what's going to do. You got to decide, can you absorb that cost, or are you going to pass it along? Chances are people were going to raise the rates and pass it along. Oh, by the way, one other thing in this first article, which is a good article, it talks about also the cost of the imported goods, but then the export, the U.S. economy as far as import-export, as far as all these things are going on. One of the downsides of this is that, U.S. goods prices have inflated, and it talks about that. Well, again, cost of goods have gone up. And so U.S. prices have gone up a little bit. But one of the things that's hurting the economy, and it's beginning to show up, I think, and it'll definitely show up in the February numbers, and that is the Biden administration right now, if you remember, 30 days, 45 days ago, stopped approving the sale of liquid natural gas, or LNG, to be exported by U.S. companies. Well, what does that mean? Well, who is the largest consumer or buyer of the U.S. LNG? It is European countries, in particular Germany and some others. And we're going to have your next article talks about Germany. But this is one of the things where Now the U.S. economy is taking a hit because of the loss of LNG sales, because the U.S. government has stopped approving export permits for LNG. So go figure. It's like now there's another shot against the U.S. economy by our own government. And the very thing that we're looking at is, where are those countries going to go that were counting on buying LNG from the U.S., which, by the way, is the highest quality LNG out there. It's clean burning and all of that. Who are they going to go to? They're going to turn around and go to Russia and Venezuela and some other countries that actually have very poor quality LNG, and it is going to do more damage to the if you will, the atmosphere and those kinds of things. So we'll take another hit on the U.S. economy on that one.
Let's see about that. All right. Well, moving on to the second article, I think we should talk more about the decision that they made. Maybe you should get someone to talk on that. If it was so detrimental to the economy, I don't think it would happen. But like, that's just my opinion. Like, no one would do anything that's gonna like tear down the economy. No president. I don't think it's a malicious kind of thing. I think there was other motives for it.
It is. There have been things that, it's been an anti-petroleum company type initiative, and that's what's behind it. I mean, that there have been things that have already been done where the U.S. was energy independent, and now we're dependent on everybody else due to the policies. And it's hurt the U.S. economy. And I will say also, if you look at when the U.S. economy suffers, the rest of the world economies suffer.
Okay, well, let's move on to the next one. This one is talking about Germany. Woohoo! So it says, U.S. set to overtake China as Germany's top trade partner. So this one goes into the United States being expected to surpass China as Germany's top trade partner. This one is wild to me, actually. According to the German Chamber of Industry and Commerce, the shift is driven by sustained growth in German exports to the U.S., while demand for German products in China has shown very limited growth. So this is kind of a crazy one. I didn't really expect this one, I guess. I guess if you're keeping up with this kind of stuff like every day, you would have seen that, but I didn't. And so how will this most likely affect our relationship with China, or does it affect U.S.'s relationship with China? Also, as importers and exporters, do they have to? Is this something they should take in account, or is this just something that's happening that no one really needs to think about?
I mean, when I was looking at this article and I was researching, just a little bit of the background and information that was on there, what struck me the most was that, the reason that the U.S. is becoming the biggest trading partner with Germany is not so much that Germany is importing a whole bunch of stuff from the United States to Germany. It's more about the United States buying more from Germany versus China buying more. And then so I dug in a little deeper, and then I found out, and I found that the article emphasized quite a lot. Well, I don't know if it was evident for both of you or not, but what I saw was that it looked like one of the biggest things, I guess, that if you want to call it that Germany is taking right now from China is that Chinese are buying less and less German automobiles, mostly due to the fact that, okay, so that's where the article stopped, and so I went and did some more research and found other articles where I kind of just wanted to find out what the reason was for that, because honestly, I've always read and heard, that Chinese love their Mercedes. They love their VWs. They love the German built engineering and quality of cars. I mean, not just the Chinese, but quite a few. The Middle Easterners love Mercedes. they like that kind of quality and status that it brings. But what I saw was that Chinese manufacturers lately, within the last year, in fact, manufacturers of automobiles, and we talked about this a few episodes ago, how they're becoming very prominent and reliable. Their vehicles are becoming very high quality. I mean, we don't see them here in the United States, but I think the article that we covered before was that I think it was Russia and Mexico that were buying the heck out of those Chinese cars. I have yet to see one in person, right? But I did see, on a side note, I did see a Cybertruck this last week when I was in San Francisco, and that's an ugly car. But anyway, yeah, I saw two of them actually. They are so horrible.
I
They're
wouldn't
ugly
know that
cars.
people are driving them. Oh my God.
Yeah.
Cybertruck, are you talking about the Tesla Cybertruck or something else?
Yes, the Tesla Cybertruck. But anyway, I don't want to get off on a tangent. But anyway, so anyway, the point is that Chinese are adapting, mostly because of what I read in these other articles, mostly because of pressures from the world, leaders on reducing the biggest carbon abusers, I guess, or environmental abusers is China. I mean, it's well known, them and India, that abuse. Of course, the United States is up there, but nowhere close to what China does. But so they've adapted a lot of environmental friendly initiatives, and one of those includes having and converting to electric vehicles. And Germany, I'm not going to say they don't produce electric vehicles, but they don't traditionally produce as many. And most of the Chinese cars that are getting consumed right now in China are electric vehicles. And so that's what I had read and dug in. I mean, this is just trying to go down a little bit of a rabbit hole. So that's just my take on it. What does that mean for importers here in the U.S.? Actually, it's good news. I mean, cars prices of vehicles and other products may go down coming from Germany, and it's undoubtedly. I don't know if that's going to happen or not, but undoubtedly, the German engineering is exceptional. I mean, it's renowned. I mean, it's unbelievable. So we could maybe start seeing better pricing. And again, I don't know. Of course, I said this earlier. When it comes to economics and finances and stuff like that, to me, it gets lost. I rather not say too much about it. But anyway, that's just my initial take on it.
Well, and I will say this is that, again, the article emphasizes that the U.S. Became just slightly ahead of China as far as the top trading partner with Germany, according to German statistics. Lala, as you pointed out, the biggest issue there is not so much that U.S. goods are being sold more into Germany, but more German goods are being imported and sold into the U.S. And with that, you do have a large increase in electronic vehicles being manufactured, especially like the Mercedes brands and some of the other German automakers, where, Mercedes has been pretty aggressive in the EV market. They've got quite a few different models that have come in, and I've been looking at that. And keep in mind, there's other German products, again, in the medical industry side and devices and whatnot. All said and done, this goes back to, again, the previous thing is that we would want to stimulate international trade. That's one thing. And the loss of the sales of liquid natural gas is a big deal, and that would have been a big plus that would have probably boosted holistically the total value between Germany and the U.S. And that's the thing, is that what we're looking at here in this particular thing is that it is both imports and exports as far as total trade. The other issue there is that not only are is China buying less German products in this particular case. So fewer products from Germany going to China in that is one thing. But the other thing is that there are more German companies that are moving away from China as a source due to the forced labor prevention and the geopolitical tensions and all of that. So they're finding other sources. So that's another issue in there. So you add it all up, and China's probably going to become much more aggressive. Talking about their vehicles, and to your point, is a good point. China is investing heavily in Mexico to manufacture automobiles, and more specifically, if I'm not mistaken, it's the electronic vehicles, the EV, or the electrical vehicles, not electrical vehicles in Mexico, with the hope that what their plan is to utilize the U.S.-Canada-Mexico Trade Agreement, or USMCA, or NAFTA 2.0, is what the plan is on that. But keep in mind, a huge amount of those components in that will be originated from China and then assembled in Mexico. So it'll be interesting to see what happens when that comes to fruition. But with that said, again, Germany's, U.S. and Germany trade relations is definitely a strong one. So I will say that it'll be interesting to see how this goes.
Yeah. No, definitely. I think it's good. I think it's good for the conditions that we're in right now, especially where the U.S. stands with China. Maybe it's a little bit of an eye opener for China. I'm not sure. So I guess we'll have to monitor that one as usual. But let's go into our last article, which I have read about actually before, because I did see it in the European news that Switzerland wasn't really I saw something with the banking system and Switzerland and Russia, which I remember they froze all the Russian accounts because Russians kept a lot of money in Switzerland, as a lot of people do, I think.
Yeah, they didn't freeze them all. They froze a portion of Russian funds, if you will. I think it was only like a tenth, or just it's like a few $1 billion versus 150 billion that's still transacting.
Yeah. So this article is talking about the Swiss cracking down on attempts to evade Russian sanctions, which this is a good thing. I think that Switzerland is intensifying its efforts to prevent the evasion of sanctions imposed on Russia, kind of establishing a specialized team to enforce the sanctions and crack down on individuals and companies using Swiss territory to bypass the restrictions. This is interesting. Let's talk about it. What do you guys think? Obviously, this is not a bad thing, but I just want to see on your behalf where it has been and why it needs to be addressed.
My opinion on it, to start off with, I'm going to say this. Let me jump in. It's about damn time that Switzerland would do something like this. Switzerland claims to be a neutral country, right? But their financial oversight in this particular case of adhering to the sanctions, what it has caused is allowed Russia to basically help finance their economy, their war with Ukraine, as well as then some key Russian companies to gain profits and in exchange in some international trade, participate in international trade using Swiss accounts. The point being is that, as such, it's taken them 2 years, and there's been complaints that the Swiss have not done what they should have done to look into this, and now they're beginning to look at investigating this. So the simple stuff is with the Secretariat on the economy. The other is the Attorney General's office that's on the more complex cases. And you know as well as I do, when they start investigating, it takes forever to start peeling back the layers of the onion. So we've wasted 2 years in this. It's allowed to go on. It's going to continue going on until they figure out what's happening. And by that time, another year is going on. So, yes, oh, great. They finally have done something. And in the overall scheme of things, you have the tragedy of innocent people getting killed in a unprovoked war with the Ukraine, and with all of that. So it's unfortunate. It's good, to your point. But there again, it's just another loophole.
Yeah, because it's not. I mean, this should have been in the beginning, right? As this came out with Russia, or like as things were starting to happen, I think they should have cracked it down immediately. That actually makes a lot of more sense for them to do that than to sit there and maybe it's because I don't know. Switzerland seems like such an innocent country. Like it's just there. Like it doesn't want to make any moves because it's like, oh,
well, they don't want to take a stand. They're neutral. They want to claim neutral, but yet at the same time, they're facilitating the transactions by allowing, the buying and selling or the moving of money and exchange of monies from one party to the other. And in this, so they can claim to be neutral, but in the same facet of that, they're doing nothing but facilitating bad behavior of certain countries. So it's, hey, Swiss, that's if you guys want to, you can say you're neutral, but you're not. You're facilitating some bad behavior out there. So
beautiful country, but hey, could you stop? Like maybe. Anyways. Yeah, I agree. I think there's not much more to say to that article. It's basically straightforward to what it's giving us. And I guess we also have to monitor until they fully crack down whatever they're doing.
Well, the action that you would want to see is them to freeze all the accounts, because you're talking, again, I was looking for here it is. They have around 7.7 billion Swiss francs of assets have been frozen at the end of last year. Okay. But that's a fraction of the 150 billion francs of Russian money estimated to be held in Swiss banks. So it's like, okay, how about you guys freeze up about $100 billion of francs in those Russian accounts? Then we'll see a big, what's the purpose of it? You freeze those kinds of funds, and now all of a sudden there's a motivation on Russia's part to say, hey, wait a minute, whoa, we need to do something here. And right now, that's the problem, is that, Putin is not interested in just a part of the Ukraine. He's wanting the whole lock, stock, and barrel. He wants the whole country. All right. So, folks, I mean, it's like, you're going to promote that. And, we got to talk about it. Freeze their funds, because Russia's not at the table. If you freeze their funds, then all of a sudden they're going to be willing to start negotiating real quick and going from there. So,
yeah, good point. Good point. It's so hard, though. It's so weird because when you like a country, you're like, oh, that country's so beautiful. But then you think about it like this. It's so annoying that this stuff exists. I don't know. To trade people, this might sound so crazy because I feel like they live in this world. But me as a person who doesn't, I mean, I work in trade, but I don't get to hear, like, I don't, it's not this insanity as if I'm working in import and export, like hands on. I feel like you hear this stuff all the time. And for us, like as regular people, we just don't even think about it. And then we hear it. It's just like kind of annoying. Anyways, I don't know if I'm expressing myself correctly, but that's the way I feel towards it. I do have a fun fact, or it's just a fact that I found it's a blog. It's beltmanlogistics.com. And one of the facts said that 88% of shippers in the United States think that communication, flexibility, and openness are the best qualities in making a successful partnership. 88%? That's pretty low for that statement, I think. I'm like, that should be 100%. But, well, it's giving me 88%. Anyways, some people probably had something else to say. Well, that's basically a wrap up for this episode today. I hope you enjoyed our articles that we chose. If you want something else to be covered, please write us. Watch our videos. They're up on YouTube. They're up on LinkedIn, or little clips. Obviously, our podcast is available on all platforms. Please listen, and give us reviews. If you don't like something, let us know. If you like something, let us know anyways. That was my rant for the end of the day. I hope you have a beautiful week. And you guys too, Andy and Lalo, obviously. Have a great day.
Thank you very much for joining us. Simply Trade is brought to you by the generous contributions of Global Training Center. You can follow the show and GTC on LinkedIn or Twitter and other social networks. Make sure you check out the show notes in the description for a full rundown of today's show with all the important links. Also, make sure that you share this with a friend and subscribe on your favorite streaming platform. We really like hearing from you. If you enjoyed the show, make sure to rate and review wherever you listen to this podcast. If you or someone you know would like to be a guest in the show or would like to sponsor Simply Trade or suggest any topic you would like for us to discuss, please contact us via email at simplytrade@globaltrainingcenter.com, or you can DM us on Twitter at simplytradepod. Thank you again for the privilege of your time. Happy trading. Simply Trade is not a law firm or an advisor. The topics and discussions conducted by Simply Trade hosts and guests should not be considered and is not intended to substitute legal advice. You should seek appropriate counsel for your own situations. These conversations and information are directed towards listeners in the United States for informational, educational, and entertainment purposes only and should not be substituted for legal advice. No listener or viewer of this podcast should act or refrain from acting on the basis of information on this podcast without first seeking legal advice from counsel. Information on this podcast may not be up to date depending on the time of publishing and the time of viewership. The content of this posting is provided as is. No representations are made that the content is error-free. The views expressed in or through this podcast are those of the individual speakers, not those of their respective employers or Global Training Center as a whole. All liability with respect to actions taken or not taken based on the contents of this podcast are hereby expressly disclaimed.